Perfect segue to Steph. And the reason I saved Steph for last is I mentioned the momentum comeback because you are buying one name that's been on your list. And it is one name that's in the momentum ETF that is now positive week to date. And it is CrowdStrike. A new buy. Tell us.
Yeah. By the way, I've been buying all week long.
Welcome.
Yes, I like when we're on the same page.
Yes.
Welcome to the
Make
party.
that chart turn
Now
around,
I'm super
please.
bullish.
You have been a buyer, right? It was Eaton before and some others. And here we are with Crowd.
Yeah. So I'm not going to get the bottom, likely, but the stock is down 41% from its highs. It has gone from 22 times EV to sales, which is not cheap, to 13.6 times, which is also not cheap, but that is a massive change, massive. You have the number one player in the industry, the number one management team in the industry that's going to fix this problem. And they have the best product. They have the best security efficacy of the industry. So this is the number one player on sale. That's what I do. Now, it is a small position, Scott, because it's volatile and because of the reasons why I didn't buy it last week. I'm sure they're going to lower numbers. I think we're all expecting them to lower numbers due to some churn, some discounting related to this to the outage.
Temporary, though, is what you're betting on.
That's what I'm betting on. And if they lower the numbers, there's a chance maybe the stock rallies because it's out of the way. Now, there's a chance it goes down too, but that's why it's a small position. And I'm going to add to it on when they do report either way. We just got to get this out of the way. Now, the litigation, the legal part, this is not negligence. This was a bug in their software. So it wasn't negligence, and I think that's limited. That also had me kind of spooked a little bit as well.
Okay, you remember on Tuesday, so just 2 days ago, this was a stock that was upgraded to buy at Piper Sandler. Oh. The price target was raised to $290. You see it's below $240 here. So the price target comes down to $290 from $310, excuse me. So the price target is obviously well above where it is now, but it was dropped a little bit, partly on the concerns of what Steph is talking about. You want to weigh in on this buy of this name right here, a name that you've loved and liked and owned for a long time?
Well, I want to emphasize what Stephanie said about this being the best management team in the industry. I have said repeatedly that George Kurtz is someone that I look up to personally and professionally. I have a lot of confidence. That doesn't mean people don't make mistakes. I've owned my own business now for 11 years. Every time we've made mistakes, we've become a stronger firm in the wake of those mistakes because we look at what happened and we ask ourselves, how do we make sure this never happens again? If you don't think that CrowdStrike is undergoing that process right now, then you don't have a lot of experience in the business world. This is part of life. Nothing's perfect. So obviously they made a mistake. They're going to pay for it. They paid for it in reputation. They paid for it in people screaming at them from airports around the world. They'll pay for it in dollars too. But they've got to come out of this a stronger company. There's no other way. And by the way, if we were to only buy stocks where the company's never made a mistake ever, the portfolio would basically be T-bills. There would be nothing to own. Some of the biggest winners over the last 10 years have had massive issues. Just think a year and a half ago, people were crying on TV over Meta missing earnings and spending too much on the metaverse. This is part of life, part of investing. So I don't know that this goes back to 400 anytime soon, but I want to be here for the long term, and having Stephanie along for the ride makes me feel even more confident.
Are we in general agreement on the desk with what Evercore is saying, which I mentioned, that this is a buyable correction and not the end of something, that for the very reasons that you both said, earnings growth of 11% is what we're seeing as we wrap up this season. We've got estimates kind of holding steady, Jason Snipe, for the remainder of this year and into 2025. And at the end of the day, that's going to dictate what everything does. If earnings deliver, stocks will deliver. If they don't, stocks won't.
100%, Scott. So, I mean, one of the things I was looking at this morning as claims come in every week, every Thursday, right? And there's so much focus on claims data today, and it obviously pushed the markets because it wasn't a miss there. There's less claims than was originally anticipated. So for me, it goes back to the story of what happened over the weekend, the carrier trade, into overcome by what happened on Friday, which is obviously a miss on the labor data.
I think it's actually not only the initial claims data, but it was also the ISM services numbers, which
was better this
that
week.
came out on Monday.
Yeah.
Yep.
And it was new orders that were better. It was employment that was better. So those two data points were a big, big deal. And at the same time, you have the VIX down 61% from the high. So that's calmed down as well. We talk about the economy all the time because that feeds into earnings. Well, guess what? The Atlanta Fed tracker again today came out at 2.9%. 2.9. So the way I always look at it into seeing corrections, as long as I feel good about the economy and earnings, you may not get rewarded right away, Scott, from good earnings, good guidance, but eventually you will. And that's why I was buying all week, small, but I was buying a lot of different names, a lot of different sectors because of the companies that delivered good earnings that it wasn't rewarded.
Including another name that you bought more of as well as you look across your portfolio and say, okay, this stock fell too much, I'm buying more. This stock, which I didn't own, fell too much. I'm buying it for the first time, Crowd. And then there's Amazon, which is down 18.5% since July 8th. You bought more of it. Yeah,
finally I'm not restricted, so I could buy some more. I thought the quarter was good. I think AWS growing 19%, the fastest of the big three. It was super impressive. The North America retail margins expanded more than I had expected. Sure, the top line was a little bit softer, but they beat it in profitability, and that's what we've been wanting on the retail side. Advertisement, I know that advertising was a little disappointing. Oh, it only grew up 20%. Down from 24%. I mean, that's crazy. It's still really good numbers given the size of the company. And operating income up 420 basis points year over year, really very, very impressive. So, wanted to make that bigger. I have been making it bigger, by the way.
So is this guy.
Yeah, I know. The two of us have been doing it since the spring.
Right? Yeah. I mean, you doubled your position a couple of different times. Yeah. Again, the stock that's down, as I said, 18.5% since July the 8th.
I honestly don't understand why it's trading where it is. I think it's just misunderstood. I think whoever among the shareholder base sold it on that quarterly report, I don't think those are long-term investors. I can't understand what they said versus what the market reaction has been. Now, I can't do anything about it. The price is the price. So I did add to it a little bit on Friday. Should have waited till Monday in hindsight. But I continue to believe that the stock should be above 200, not below it, sticking to my guns, staying with it. And again, glad to have Stephanie as my riding the stock with me.
Jason owns it. UBS.
Jason too.
The tech sell-off they call an opportunity to build quality tech exposure. JP Morgan. Their buying is biased towards the tech giants, right? That's what they've seen from retail traders at minimum, especially at the single stock level. There are, mega cap names within that list, whether it's NVIDIA or Microsoft or what have you. You own the stock too. Redburn, by the way, of Amazon today says, with expectations for e-commerce now reset and growth projections for AWS still low, we view the recent derating as an attractive buying opportunity. I pointed to yesterday where valuations across this space have gone in a reasonably short period of time, right? Over the course of 1 month, you've had a dramatic re-rating in the forward PEs of every single mega cap name.
Listen, Jassy is firmly in the seat, right? And I think about, okay, miss on the top line. The stock sold off 9%, which I believe is totally overdone. AWS is a profit center. Their margin business is 35%, right? So when I look at this company and I look at what Jassy's doing on operational margins, like you just discussed, Steph, I mean, there is a lot of runway there. Maybe there's some softness in the consumer, but if I see AWS acceleration, I see movement in operational margins, I think that's credit to Jassy, and I think it's an opportunity to buy the stock.